When you can go short an asset without having to own the asset, what doesn't matter what it is, whether it's oil, whether it's gold, whether it's molybdenum, whether it's Bitcoin or now ETH, that's a bad thing because naked shorting is not allowed in traditional spot markets. And spot is not exactly the right term, but in the stock market, you're not allowed to naked short. You actually have to have the stock in order to short it. And same thing with a barrel of oil. In the olden days, if I wanted to trade you a barrel of oil, I had to have a barrel of oil. I couldn't just make up a little piece of paper that said, oh yeah, if I happen to have a barrel of oil on this date, I will get it to you. It's actually kind of BS. And I get it that financialization has some positives, but paper futures markets have a long history of enabling manipulation, and they make a lot of money for the people producing the paper and destroy a lot of people on the other side. So maybe I'm not as big a fan of futures markets as other people. But what is going to happen is large institutions now can short Ethereum the same way they shorted Bitcoin, November 21, right? Almost to the day of the peak. They approved the Bitcoin futures ETF and it got $1 billion overnight. And everybody's like, oh, that's so great. I'm like, well, think about it. For every buyer, there's a seller. And guess what? There can even be more bigger sellers on the other side pushing that incremental trade the wrong direction. And once that cascade starts, because of high frequency and because of the machines, those machines will just start chopping the bids. History says it's not a good thing for short-term price. History says it's not a good thing for free and open markets because it allows people with large balance sheets to manipulate. And I use the term manipulate intentionally because they've paid massive fines. They, meaning these large institutions, have paid massive fines, like hundreds of billions of dollars without admitting guilt. I always loved that part. How the hell do you pay $1 billion fine, but you get to say, but I'm not guilty? And this system is complex and we don't have enough, well, self-inflicted. We don't have enough people to adjudicate all the cases. But if we didn't have some silly laws, I mean, like just take the marijuana laws, right? How could there be people sitting in jail for marijuana that's now a legal thing? It's like, really? I mean, so if we didn't clog up the system with all of that, then we could probably have time to adjudicate the big stuff. And if a firm, and I can name names because they did this, JP Morgan, if they manipulate the price of gold, right? They spoof the price of gold and they make $20 billion of profit, right? That's all public information. That's wrong, right? That's illegal. But then they pay $1 billion and they're okay. I don't think that's okay. And so the same thing is going to happen here. Not necessarily them, but it could be them. But somebody or some buddies are going to come into the ETH market now and they're going to get very short this asset because they have to take the other side of everybody who piles in long. And I don't like it personally. If you have a choice as the approver, as the regulator, as the gatekeeper, as the traffic cop, there are lots of applications for spot ETFs, and there's lots of applications for spot Bitcoin ETFs. Now, why are spot ETFs superior? They're superior because you actually have to own the asset. It's like GBTC, the trust. It's not an ETF, it's a trust, but they actually have to have the BTC in custody, in the trust, in order to issue the shares. That's not what happens in futures. You can just say, yeah, knock yourself out. Go along all these paper contracts. I'll just make more. It's like the old Doritos commercial. Go ahead and eat them. We'll make more. And that causes an imbalance. And when the proportion of paper assets relative to physical assets in any market, and you can go back and look at oil, soybeans, you can look at corn, you can look at, any asset. When the paper ratio to physical gets out of whack, bad things happen. And it makes sense that a paper good printed out of thin air, right, what are you talking about here? That happens in other markets, the currency, right? If you can print an asset out of thin air, it makes the value go down. And that is kind of what happens in currency markets. It's why currencies consistently go down and why we experience inflation. But what it really is a theft of your wealth through the devaluation of the asset you use to procure goods and services. And I saw this Twitter war the other day. I'm never going to call it X, by the way. This Twitter war where two guys were trying to debate this construct that inflation is good for you. Like, on what planet? I mean, really? Have you been brainwashed that badly? Because just think about it. If I have $1 and over a period of 30 years at 2% per year, it's now worth 50 cents of purchasing power. How is that good for me? I toiled for $1 and now I have less than $1 of purchasing power. How is that good for me? Now you say, oh, but your income went up. Look at the history. For the average person, that ain't true. Your income goes up far less than your purchasing power is eroded. For the people at the tippy top, awesome. The all-seeing eye, right? Those people love inflation. Might be why they invented it. Yes, it's an incentive to save or spend. If you turn the lever one way or the other, if you turn the lever to more devaluation of the currency, you're incenting people to spend their money today and not save it for tomorrow. If you turn the lever the other way, so the asset is deflationary and actually appreciates in value, which doesn't happen very often in the real world, but does happen with things like Bitcoin, then you are incented to save. How about the normal, the middle, which is we don't mess with the value of the currency and we incent savings or spending through free market determination of things like interest rates and return on invested capital. That's when things thrive. So like, who gets to choose what should be incented? The corrupt governments, right? You can write off your mortgage interest, but not your student loan interest, not your credit card interest. Why is that?
Social contract.
The lobby, right? The lobby paid a lot of money to encourage home ownership. But why do we encourage home ownership? Again, that's an asset. Here's the crazy thing. That's an asset that if you get that asset in people's hands and you devalue their currency really quickly, in theory, that asset goes up a lot. According to Zillow, my house went up. My house didn't grow, didn't get better. It's actually wearing out. I just noticed the paint's falling off. The E is on the front. I gotta have somebody fix that. So what happens to a 20-year-old house? And it's just nonsense that goes up. Well, it doesn't. The land, because it's scarce, actually rises because it's near things. You think about it, there's plenty of land in this country, plenty of land for every man, woman, and child and friend. And we could bring in all the people. We could bring as many immigrants as we want. We got plenty of land. There's not a problem with land. Problem is land near the stuff. We all want to be near Applebee's and we all want to be near Best Buy. Okay, land near that stuff is more scarce. It's still not scarce. I mean, you could use Walmart and Target or a gas station or whatever, but people want to be close to restaurants. They want to be close to, consumer goods, schools. And the reason I say is because you go to any community in the United States, any state, any community, you drive in, you're seeing the same stuff. You're seeing the Joann fabric, you're seeing the Burger King, you're seeing the Applebee's. And it's because, humans are going to human and we want the same thing and we want to be close to them. And the further away you can have lots of land. You got to where your parents are in Montana, you got lots of land. I don't know if you need lots of land, but I just picture you with the Yellowstone hat riding on the horse. But it's probably not the case. They're probably in a very nice community, but you can get land if you want it. Well, except all the really rich people who bought up all the land, but there's plenty of land. And I just feel like when it comes to devaluation of currency, it's a plan. And I said from 1776 to 1913, there was no inflation. The dollar was worth $1 because there was no central bank. And it wasn't. And if you go back in history before 1607, there was no devaluation. It wasn't until the Rothschilds created the Netherlands central bank and then the Bank of England and all the other central banks around the world. That's the era. And look, we grew up in that era. I wasn't around in the 1400s, so I don't really know what it was like. It was probably a pretty hard life, but I'm not going to argue that life isn't better today.